Welcome to our webinar on how to maximize business value for the sale of your business. My name is Kelly Shaw and my business partner is Trevin Rasmussen. We are principal brokers in the Bristol Group, and today, as mentioned, we'll be discussing how you can focus and concentrate on specific items to increase the value of your business prior to a sale. We'll cover about 25 items. First in this list is have clean and current financials. That's very basic, not much to be said there. Second is make sure all banking relationships have no prepayment penalties, and the reason for this is that most likely the sale will be an asset sale and you will be required to pay off any debts owed on those assets at closing. If there are prepayment penalties in some of your banking relationships, that's going to jeopardize you. And so it's best to determine and solve those in advance so that those prepayment penalties do not apply to you. Third, and far and away the most difficult to accomplish, is to have a current and complete operations manual. This will greatly increase the value of your business because a seller, or pardon me, a buyer, wants to know that when they buy the business and step in to operate it, that they can continue to operate it no matter what happens to the seller. That there are systems and employees and operations in place that will continue to run. This is very valuable to have. You should have an employee handbook signed by all personnel, and make sure that all your personnel and employee human resource files are current and correct. Have employee agreements for all necessary employees. Now, this doesn't necessarily have to be every employee, but if you have key employees who need to transition through the sale of your business and stay in order to make the new business or new owner successful, you should have employee agreements with those employees. Do an actual inventory and make correcting entries for old and stale inventory. Part of the valuation process and the due diligence process is the counting of your inventory if you have a business that is inventory heavy. And you will find that any old inventory or stale inventory you had will be discounted in that process anyway, so you might as well take care of that now. Likewise, the same applies to your accounts receivable. If you have unproductive lines, consider discontinuing those. And you should document your perks, which is cash benefits that you take out of the business. This is going to be things like payment for your car, personal insurance, maybe you run your gasoline through a company card, maybe that you have some personal finance issues that you run through the company, cell phones, whatever it is. All of those items are actual cash available to a buyer. And by knowing that, we can drive up the sale price of your business. Have a detailed equipment listing with the acquisition costs. If you don't have this, it's probably on your tax return if it's been prepared by a CPA. Make sure all distributorship agreements and exclusive right agreements are signed and current. You need to make your office look attractive and clean. As we've discussed in prior webinars, one of the things that will happen once a buyer is qualified and interested is that they will take a tour of the business. And first impressions are important, so you're going to want to spend some time solving that one. Compare yourself to the industry standards for financial ratios and make adjustments. If you don't have those, we have access to them. That will tell you what all of your competitors are doing in all of the key financial ratios and components. For example, if your average accounts receivable collections are 42 days, yet your industry is collecting in 18 days, you need to make some adjustments. Certainly the buyers will find that out, and you need to know what the standard is for your industry and your competitors so that you can come in line with those ratios. Make a list of what makes you better than competitors. Document any proprietary services, softwares, or systems. Try to bring your accounts payable current, and many times we understand that cash needs doesn't make that so, but if possible, it's more presentable with current accounts payable. Maximize profits is obvious. We'll talk about why that is important in valuing your company. But the larger the profit on your financial statements, the larger we can drive the price up for your company. Check your pricing, make sure you have all your leases documented and your employee benefit programs are documented. Have all equipment maintenance records. This is very important if you have real heavy, intensive, equipment-oriented business, and you're going to need to prove that the asset value of the assets is real. Make sure you have all your corporate document filings current and have proof of any patents, registered trademarks, or trade names, and prepare a company story and include future projections and plans in that company story. Although we may not give those future projections out, we at least will have that company story ready to go to really motivate that buyer. Lastly, as we've mentioned before, we have recently published a book called The Complete Guide to Selling Your Business. It's 133 pages, packed full of information in the process of selling. It is valuable. It has documents that will be used, tips and techniques for negotiation. It really takes you from the listing process and the decision to sell all the way through the end in a step-by-step process. Many of the people who we list with or who list with us and have read this book consider it invaluable. $14.95. You can find it at our website at bristolgrouponline.com. We encourage you to visit that website, order the book, and we appreciate you listening today. Thank you.